Hello, welcome to Winning Wall Street's Money. If you like what you hear, please make a contribution to help me stay on YouTube with sharing videos by making a tip to my PayPal. Financial markets. That's what I'm going to discuss now. This will be the general information that gives you a broader view of what the financial markets are. Financial markets are comprised of securities and derivatives that people can trade. Some of them are called stocks, which also another name stocks are called, or equities. There's also Forex financial instruments, which is just currencies. There's also cryptocurrencies, which is just digital currencies. There's also binary options that are, again, derivatives. There's also the futures market that comprises several different financial instruments that are all derivatives. And there's also the option market on stocks and also option markets on futures. They're also derivatives. Derivatives have expiration periods, just like insurance. Derivatives have time periods that are going to expire, and they're often leveraged products. So if you buy one product of them, maybe they call them contracts, they actually are equivalent to multiple contracts, so leverage to require margin. So let's go over something here. We're looking at the futures markets, the 1 minute chart, and in the futures market, there's several financial instruments that trade in the futures market. There's cryptocurrencies that trade in the futures market. We're looking here at Bitcoin. There's also equity indexes that trade in the futures market. We're looking here at the S&P 500. Also, treasuries. This is the 30-year bond, the US dollar index, crude oil, and gold. So in the futures market, they only offer right now one cryptocurrency, the most popular, Bitcoin. And look at that, it's going up. They offer several equity indexes. The most popular is the S&P 500, comprised of 500 US publicly traded companies. And in the bond market, they offer, the most popular one is the 30-year bond. They also have other treasuries, the 10-year and 5-year. And they also offer currencies. This one is the US dollar index. It's comprised of several currencies. The US dollar index, the three heavily weighted indexes in it, the first is the euro. It makes up more than 50% of this index. The second is the yen. And the third is the British pound. Look, the US dollar is getting weaker. It's going down. Also, other commodities they offer in the futures market are energy. This one's crude oil. Some of the other energy financial instruments they offer are natural gas, heating oil. They also offer commodities that are in the metals. Gold, this is gold. Silver, platinum. These financial instruments in the futures market all have options that trade on them. If you open up an account with a broker, not all brokers are the same. Your broker may not offer you futures. They may not offer you options. Some brokers only offer you stock. Some offer you stock and options. Some brokers might only offer you binary options or cryptocurrency. And not all brokers are in the United States. How well regulated are them? How well are you going to trust them if they're in another country? If they lock you out of your account just to take your money and you can't challenge them, yeah. So you might be concerned of who you open a broker up with and what financial instruments they offer. So what I'm looking here on these 3-minute charts, these are called candlesticks. The green means it's open higher and it's trading higher from its opening, where the red means it open and it's lower from its open. And this yellow is inside candle. That yellow means the high and low has not overtaken the prior candle yet. Got it? Other things to be concerned about. When you look at financial instruments, such as Forex, again, the Forex exchange only offers currencies. The Forex symbols have 6 letters. 3 letters, the first 3 represent the stronger currency, with a / followed by 3 other letters of the other country. So Forex are pairs. There are 2 currencies trading against the other. Got it? So the first 3 letters is the stronger currency, followed by the / 3 letters. So this one is the euro US dollar. So if the price is going higher, that means that's good for the euro, versus the prices are declining, that's good for the dollar. Let's look at another example, which is here, the US dollar Canadian. So the first 3 letters are US dollar, followed by Canadian. So if the price is going up, it's good for the US dollar, vice versa. Stocks. Stock symbols could be anywhere from one letter to multiple letters. All financial instruments, stocks, futures, Forex, cryptocurrency, binary options, they all have what's called bid and ask prices. So if you are bullish, what does bullish mean? That means you think prices are going higher. So you buy the position. When you buy something, you buy it on the ask. Yeah, bid and ask. If you're bullish, you think the price is going to go higher, you buy at the ask. And when you're in a position, it's referred to as long. Your position's long. You need the price to go higher, start making gains. And then when you close it, if you close it for higher than you bought it for, that's a profit. It's not a profit till you close it out and have it more value than what you put in. So looking here, you have a bid. What does the word bid mean? Bid means if you think price is going lower, you could short it. Yeah, you could short it, make money on the downside. How's that so? Well, if you short it at one price, and then when you get in that position, the term is called short, and as the prices decline, you're making gains. And when you close it, if you close it for a difference which is lower than you bought it for, that's a profit. That's some basic information you know now. And there's also, let's go here. This symbol is the NASDAQ 100. It's a stock index of the largest companies in the NASDAQ 100. Look at here. The bid is 270.53 and the ask is 270.50. Well, they're moving fast. But if you look here, they're almost like 1 penny wide. See the difference? Just look the last two numbers. They're about 1 penny wide. That's good. That's good. First, if you're looking at something that's wild and crazy, maybe they don't have that same let's look at Tesla. So here we go. Look at the bid. 402.22. Just look at the last two numbers. They're more than a penny wide. So what that mean is, if you buy it at this example here, 42.30, and if you want to buy it and you're in a position long and it goes higher, or if it doesn't go higher, you still, when you sell it, when it close the position, you're selling it back to the bid. So you need this to be higher than the bid. If it's too wide apart, you're going to have to make more of a gain just to break even. Have you heard of a product called Apple? Yeah, Apple stock. Look at that, 4 letters. Wow, 111.45, 111.46. So that's even better. That's a penny wide. That's not bad. So if you buy it, you only have to have at least 1 penny or 2 pennies higher to at least be even. Got it? Let's look at options. Well, first let's go to here. So this is just called level 1. Level 1, where you only get to see the last price, the net change, the bid, the ask, the volume. That basically is level 1. That's all you see is just this. Most brokers only show you that. Yep. You have a trading app called Robinhood. Most of them only show you this. But there's many brokers that participate. What are brokers? So there's many exchanges, market makers that participate. So here we have Apple, the bid and the ask. And these are all the market makers that are participating in the stock. So if you're bullish and buy the stock, look at that. You get to see what the different prices are. See the lower ones? They're not so good. The top ones are better prices. Yeah. Let's just put in Tesla. C2. This is level 2 for stocks. So 403, 402.90, big wide difference. The point is there's different people participating in these markets that want to sell these products. So obviously if the price is so low, this person is really not participating so well. They're not going to get so much business. Where this person's offering to sell it to you for a lower price, they're offering a better deal. So they're probably going to get the better deal. Let's look at options. Options don't trade on all stocks. But in the futures market, you have options on all financial instruments. But here we go. We're going to look at options right here. Options have expiration periods. So the S&P 500, this is a stock ETF. Right there is 0. That means expires today. Let's look at one that expires September 28th. It says 3 days to expires. That's 3 trading days, not calendar days, trading days. Let's open it up. Oh, look at that. It's got a lot of information. Yeah, These are all contracts. So again, these are all contracts that have expirations, all these different periods. But I'm opening this one up, and these are all strikes, and I'm going to narrow it down. You have calls on the left, puts on the right, and there's many different strategies you could do with options. But again, even the options have bid and asks. So the stock right now is at 327.54. So let's look at the nearest strike. See the word strike here? Looking at the nearest one, 327.50. So the nearest one, 327 strike. So if I look on the put side, it says puts, 327, that's good. 182, 182, it's pretty good, not that wide. Let's go back to here. Looking at the futures on the 3-minute. Look at that. This is a consolidation. Got a lot going on here. Some basic information I show you. That's good. Baby steps. You'll learn. Final thing is, when you're comparing a product, stocks, cryptocurrency, binary options, futures, Forex, it benefits you if you compare it with the big index. So here we're looking at 3 examples. These are stocks. This is a stock index, S&P 500. The middle is Netflix, and this far right is Disney. What am I comparing for? The performance. If you're buying it because you think price is going higher, well, what direction is this line going? Line is declining. What direction is this line going? It's declining, but it's also now in a consolidation. See, and this, Disney, what direction? Declining. So if I'm going to choose one of these, if I was to choose one of these, which one looks like this better performing one? Well, this one right here. Yeah, just for example.